What is going on, guys? Free Trades here, bringing you another new weekly stock watch list. Before we get started, though, don't forget to leave a like, comment, and subscribe to the YouTube channel. We'd really appreciate it. And without much more being said, let's go ahead and dive into the watch list. So, first things first is we got to cover earnings, guys, and what stocks are going on. So, obviously, if you're looking on the screen right now, we have a lot of crazy stocks reporting this week. This is tech earnings week, first quarter of the year for 2025. So, first few stocks for the week to start it off will be BA. Not so much a tech stock, but obviously a really important company reporting this week. That'll be on Tuesday before market open. That's one to keep an eye out for. Other companies that I'm keeping a close eye for maybe some sort of post-earnings play could be Logitech on Tuesday as well. After close, you have Tesla, Meta, Microsoft obviously being the biggest ones on Wednesday. Those are some of the ones I'll be keeping an eye out for on that day as well. And then last but not least, of course, last few stocks to round off the week will be Apple and Intel. Those are other two stocks that I'll be keeping an eye out for in case we get any sort of post-earnings play on those stocks as well. So pretty busy week with earnings. It is one that could catch a lot of people off guard because of how quote-unquote expensive the contracts can be because of the value they give back based on the move. So stock like Tesla, that is considered expensive because you're getting paid, the value that you get for a dollar move isn't equal to what you normally get as a dollar move on Tesla on a regular week when it doesn't have earnings. So most of these stocks I won't be covering because they have earnings, and I will not be playing them until post earnings. So you'll see my watches is a little bit different this time around, but it's to adjust to the week and kind of go around the tech stocks that are reporting for the meantime. So especially with how January has been, it's been a little slow and a little bit choppy, so you want to be a little bit careful with what plays you take, and especially on a week like earnings, these weeks can definitely burn a lot of people, especially where the market has been recently. So we can go ahead and dive into the watch list now, since I know you guys are dying for this at the moment. But first things first is, I got to cover ES and NQ. So as far as ES goes, it is really simple. If I go on the 4 hour here, you can see that I'm currently looking at the double top that we have created at 61.63, which is the all-time high. That's all I have for my notes for ES, is obviously looking up to the upside. And then as far as the 30-minute time frame, I actually have a uptrend here to chart for you guys as well, or for you guys to chart as well. You can see this starts at 12 p.m. on Wednesday, and you can see how many times we rejected off of it, and that's the point we rejected at when we tried the all-time high on Monday morning, or not Monday morning, sorry, on Friday morning off the open, where we rejected off of with ES. So pretty important trend line, something to keep an eye out for in case we happen to climb back up and retest that all-time high level and how much room we could potentially have on that. So that is all for ES. Next up is NQ. If I go to NQ on the 4 hour here, you can see what I will be talking about. All-time high isn't until 22,450, so we're still relatively far away on that 500 points, but I am keeping an eye out for the upside, which is at 22,100. First things first, though, is I want to see us claim 22,000 with a solid close above that, and then obviously 22,100 would be the next area that I want to keep an eye out for with that. So those are the two levels I'm looking at for NQ. No trend lines, no nothing else that I see on that can match ES. So relatively simple setup that I'm looking at for NQ for the beginning of the week. Next up is the actual watch list. So first one's going to be ARM. I know this one's a little weird, but with Trump saying a few things regarding AI, this happened to be one of those stocks that happened to have a major run-up, but we also happen to have a gap as well that it created over the day when this news did come out. So I will be looking at 160 with room down to 157, which is where the gap ends. The gap is around $3. You could make an argument to maybe play it here at this bottom here that we had at 162.50. Me personally, though, I'm going to look to play it safe and just wait for the 160 level. I'm not too familiar trading the stock, but when I do, these levels in contracts happen to pay way too much, more than they should sometimes, I swear. That is definitely a stock that I'll be keeping an eye out for. Next up is Google. If I go to Google here, if I go to the 4 hour, you can see that this is one of the strongest stocks that we actually ended up closing on Friday. You can see that we barely closed above 200, and we're barely hovering around that level right now, but Google is something to keep an eye out for. First level that I'll be keeping an eye out for on Google will be the 201 area, and then after that will be the 202.29 area for the all-time high breakout for that. Not too much going on with this. It's just really the market divergence that this stock has had compared to where the market's at, with where ES is currently sitting, where NQ is currently sitting. Google happened to make a great comeback and at a spot where this could be catchable yet again, like we did last Tuesday. If you guys were able to catch that on the watch list, I believe that was around 50% off the open. If you guys ended up taking that trade idea that I'd given you guys last week, pretty crazy. I think I caught it for around 25%, made $3,000 on it that day. So pretty sick move. This is not one you want to miss out either. So we have Google, and then last but not least is Shopify. Shopify, if you go in the 4-hour here, which is the perfect time frame because that's what I've been using for all of these, you can see that we have a trend line that we have been respecting. We have rejected off of it twice now. Pretty close to this one, not really necessarily a rejection, but close enough to where we can call this a rejection. Really, all I'm looking at for this on Shopify is a break of 109.50 going into 110. Now, why 109.50? Well, 109.50 is going to be the riskier entry, but it is the point of where the trend line starts to happen to break out. So my idea behind this is if we happen to start catching some momentum and volume and buying pressure past 109.50, which will line up around with that trend line, we'll be able to get that gap, or not the gap, sorry, we'll be able to get that momentum move up that I expect at 110. Now, obviously, you can play this at 110 and be a lot safer, but I'm looking to take the extra risk at 109.50 and happen to see if we get any momentum or buying pressure at that point going into 110. So 110, easier entry for you guys for that one. Really, all I'm looking for this is a 50 cent to $1 move on that. That's all you need on Shopify for this to pay around 20 to 40% at times, maybe even 50 depending on the IV and volatility behind Shopify. So, but that is about it for the watch list, guys. Hope you guys enjoyed the video. With that much more being said, don't forget to leave a like, comment, and subscribe to the YouTube channel. We'd really appreciate it. And with that much more being said, hope you guys have a good week and safe one. Peace out.